many other ways in which you're saving money, but on the top of that, obviously, more importantly, in some respects, getting more results from that dollar beyond just this kind of transparency thing and the smart contracts and so forth. So we'll sort of see how it goes. But why don't you, each of you, just encapsulate from your perspective and the work that you're doing, what this technology means in terms of its potential and where you see the biggest opportunities for specifically the field that you're interested in.
Sure. So I've always tried to describe blockchain almost in reference to another foundational technology, which is, of course, the internet. So that if the internet introduced a world of low-friction communication, blockchain has an opportunity to create a world of low-friction value transfer. And then with that, trust. Those are the two big ingredients. So I work in the $5.5 trillion global insurance industry. And it's a little bit like the CIA. You only know that it matters when we fail, right? So after Hurricane Maria, after massive floods in Houston, all of a sudden you really do care that State Farm showed up or not. So if you think about one of the applications, right? So in Florida with Irma, we've had probably the largest mass evacuation in U.S. history, right? But it's a false question to ask a household that is poor to move north. You're going to run out of fuel along the way. You're going to run out of the ability to get shelter. So introduce blockchain, then you could start asking some really interesting what-if questions. What if we could provide every person who was in an evacuation zone, in harm's way, or in the line of sight of a natural disaster or other event, here's your $5,000 evacuation dividend. Now you can move north. And who could do that but, of course, the insurance industry? Every policyholder for a homeowner's policy ought to have that kind of evacuation dividend. And it's easy to geo-reference, it's easy to kind of get that third-party validation that we need in the insurance industry to validate a claim. So that's just one idea that absent blockchain, or absent, again, this distributed ledger and the connected world that we live in, you couldn't even conjure it up. The alternative, however, is painful. The alternative is all of these households are waiting weeks, if not months, in many cases years, to go through this third-party validation process. And so we don't have to go outside of North America to look for use cases where blockchain and this type of technology can remove the friction in humanitarian response. It's happening right here and now. Then you translate this conversation into the emerging and developing market. We do a lot of work with political risk insurance and capital motivation. It's the most cumbersome, friction-laden business process we have. It often takes up to 18 months to underwrite and validate a project. Why? What happens in those 18 months? That's humanitarian opportunity costs, right? That's capital that's not flowing, that's investments that are not being made, and frankly, we are crowding out the rest of the capital markets because we're all looking for the 2 or 3 deals a year that can be successfully underwritten as opposed to going down market. So when you think through how does this distributed technology enable new thinking and removing friction and creating a big transparency dividend, those are just at least a couple of the things that we're thinking about.
Great. And Grace, I mean, Giveth as well is very much focused on the friction reduction.
Absolutely.